Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. It was another big day in New York with the release of inflation data. There was very much the possibility there that it could be coming off a little bit, and it did. Was that the ultimate peak in inflation? Possibly yes. Does that mean that US equity markets are going to continue higher to infinity? Probably not. In fact, the price action on the day immediately after the release of the data was that huge jump, but it was without a liquidity sort of period. It was just a pricing higher. And then after that, the market drifted sideways for most of the New York session. In fact, all of the New York session. I think the US 500 only closed 8 points higher. On the day in Asia, we've seen some further gains, but I would keep an eye on 4,200 in the US 500. If we get back under there, it's a warning sign. Under 4190 would be a real worry. My scenario is that there is a chance here that we're going to see, and this is something no one else is saying or expecting, and which is why it could hurt the market the most, which is often what happens, that in both inflation and the tremendous equity market rally of the last month both peak simultaneously around now. So that would be a very interesting outlook. And how that works is that everyone punting, looking, investing for a peak in inflation, because we'd all seen the Bowser prices coming down for gas in the US. We know that food exports out of Ukraine, Russia are on the uptick, and therefore prices for food generally around the world are moderating. Some commodities have had a bit of a rise, but in terms of food and energy, there's been moderation there, if not downward correction. So we were looking for some sort of stabilization of inflation or reversal. The first indication on that 1 month data is that that is the case. Of course, it is only 1 month data, and you can have a pullback and still go to yet higher inflation. That's why I think the Federal Reserve will again hike by 75 points at its next meeting, but it may pause after that if the next inflationary number is again sub 9. So that's something to look for. But what my point is that everyone's kind of got long and invested in the equity market, expecting some sort of peak in inflation soon, that would allow the Federal Reserve to stop hiking. I don't think they're going to immediately stop at all. 75 points coming, as I just said. But what it means is the market may be caught long, and that price action after the release of the data suggests that might in fact be the case. So if you were trading the US 500 US equities on the day, you would hold your long positions for now, but I would definitely keep an eye on that 4,200, 4190 level in the US 500. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.